Okay, well, welcome everyone to NewFinance. I'm Eddie, I'm the CEO and founder of NewFinance. Mark Pierce from Iris is probably going to arrive a bit later. Mel is also your host. She's going to be scribing and helping with the innovation. This is part of our Disruptor series, Insurance Disruptor series. So we thought we'd take a look at the technologies that disrupt insurance. And I know many of you are familiar face and you've been here for the first four. This is the fifth of a 6-month series. We've looked at quite a few really interesting ones. Today, of course, is on telematics. And I suppose most of you have an idea of what telematics is and what it does. It's quite interesting. It's revolutionizing the industry right now. Quick welcome. We'll do a quick audience map. Most of you have got little spots that tell us who you are in the insurance industry or not in the insurance industry. Roy's here from the Accenture Insurance Technology Labs. Yep, and he's going to give us a quick overview of what they do. Then we've got a couple of scenarios for you, and we'll work through those for an hour each. Coffee break in between, up on the boards. We're going to ask somebody from each group to come up a bit later and tell us what your findings were. The scenarios are quite interesting. They'll give you an exercise to work on, a creative exercise. And for those of you who've been here before, you'll recognize that process. Well, then we'll do a learning reflection section together, and then we'll do closing. All the diagrams and so on will be photographed, will be video. This will all be put out on the website and so on. So for those who can't come, they can see it. You can also review, and you'll be able to see photographs of everybody else's board as well. So that all gets packaged together. So, Roy, do you want to come and grab the? So you have Roy from the Accenture Insurance Labs.
Yep. Good morning, everyone. Nice rainy day today. I'm just going to talk briefly, and the slides are just a little bit of an anchor in terms of what we're doing in the telematics space. But it is very much a disruptor. Whilst we're kind of focusing on telematics as a topic today, we're doing quite a bit around the connected insurer space. Device-to-device connectivity, and really what the true digital insurer is going to look like in the future. Telematics is getting a lot of airtime, lots of pilots going on with lots of insurers, some more mature than others. And what we've tried to do in our labs is to try to set up a mini ecosystem. We've got software within the P&C space. We have products set up as accelerators. We've got some partnerships with some analytics firms and our internal analytics capabilities. And through that, we're running a staff pilot in 4 countries. So within the UK, Italy, US, and Canada, we're currently running a staff pilot from a test perspective to capture risk data, do the driver behavioral analytics with the partner firm that we have, get the insights coming in, and essentially start to do some of the, what I would call location-based scenarios in terms of what we think will be the proper disruptor in the marketplace. And it's all about just understanding the customer, understanding the customer's preferences, and not necessarily pushing telematics in the, I'm gonna race from a price reduction perspective to get you the cheapest rates down, i.e. selection, but actually understand it from more of a customer service, customer empathy, and a proposition perspective in terms of what that customer wants. So our point of view on this space is, it's not necessarily just about the driver score, the behavioral driving, and what that does to the premium. That's one aspect. But it's about the customer service aspect. It's about the location-based, knowing them, knowing when they want to be communicated by, to, and how frequent, and start to actually expand the ecosystem that the insurer is playing in. So they drive out value-added services in the marketplace, whether they're location-based data and value-added services with companies like Starbucks or petrol stations or other activities, but it's about expanding that ecosystem so they have a more positive engagement with the end consumer rather than a grudge purchase, a claim, and a renewal, right? So a little bit more positive in terms of the engagement that we're actually looking at. So through the ecosystem that we've developed, we've got a mobile capabilities built. We have product accelerators built in terms of key components. And then we've got insights and next best action related activities coming out from an analytics perspective in terms of how that closed loops in terms of the proposition that you want to take to the marketplace and how best we want to try that out. The biggest issue we see right now is for an existing insurer's customer base, how do they actually engage with that customer base for them to actually increase the adoption rate? right? So it comes down to understanding the micro segments of that customer portfolio and what customers want to opt in for. Some may opt in for wanting to be measured to have a lower rate. Some might not want that at all, but they want to be opt-in to actually get better customer service or value-added services. And some might opt in because they're getting better value associated to the claims process. That's one of the biggest things that we think will happen with telematics in the mass market, is if you can utilize it within the claims process, where you can actually do accident reconstruction at point of impact, data associated to the location of where the accidents happened, repair network data going out, and actually proactively getting in front of providing a set of services to the end consumer once you actually have all the information associated, but doing that in a more proactive fashion rather than a reactive fashion, right? And we think there's a big opportunity there rather than just the score, the behavior driving, and the premium rate reduction for young drivers, right? In terms of the things that we're looking at as part of the pilots, we're looking at the proposition, we're looking at the economic modeling associated to what segments work, how can insurers make money, what are the key aspects associated to the insurer's P&L, and what influences telematics may have to each component of that P&L. Whether it's the marketing bit, whether it's the underwriting pricing bit, whether it's the servicing side, whether it's the claim side, right? How the influencing factors start to actually drive out, and how would you actually make some money associated to it. There isn't a lot of claims data out there in terms of behavioral driving connected to risk, connected to exposure and loss ratio. So folks are just gathering that information now, but they don't really necessarily understand what the impact of that might be from an economic perspective. So we're trying to do a couple of scenarios with a couple of insurers. We're trying to flush it out a little bit to try to understand what components they may need to talk through in terms of how best they actually industrialize the pilot solutions that they've got running. Yeah, some markets are more mature than others. Italy, obviously, is a lot more mature. UK can be more mature because of the direct channel activities that's going on here, and some of the aggregator activities going on. And the US is starting to dabble a bit, right? And folks are trying to decide whether they go with activities associated to what telematics is on a device or a mobile phone in terms of data capture and behavioral driving data coming in, or whether they actually talk to the auto manufacturers. So one of the things that we're doing in our labs as well is through our industry groups within the auto side, we're also talking to a bunch of auto manufacturers in terms of where we're actually taking a stream directly from the fitted devices in the cars and actually bringing that data in to the ecosystem that we built in. So we're looking at all aspects associated to the planning and the execution side, the actual hardware, the analytics, and some of the other components associated to what the managed service might look like. So our whole point of trying to build this is to test some stuff out and actually have some material things that we want to go talk to some clients about in terms of actually running an end-to-end service. This is a little bit of a logical architecture associated to what we've built in the environment. We've got Accenture Duck Creek solution in terms of the core, and then we've got a set of exposed services with mobile apps built in the front, and then we've got telematics related data that's actually coming in on the back on a managed service, and this is all running on the cloud in terms of what we've got currently going on. And then I mentioned the staff pilot. So I wanted to keep it kind of brief, but probably more open it up to you guys to have a bit of a discussion rather than me standing up here and presenting to you guys, if that's all right.
We'll ask Roy a question.
So you're, have you got a good example of proactive claims? So could you actually even perhaps try and point out to the customer that he may have lost something and he doesn't know it? Is that how far you could go with proactive?
You could do things as almost claims avoidance. So yeah. If one of the things that we're looking at is crime-related data, road accident data combined with where the individual is driving, and if there's a propensity associated to accidents happening on a road, let's say at 10 o'clock when it's raining, then you can start to actually have some proactive messaging back to the end consumer to say, look, we've noticed that you're driving on this road twice a week. When it rains after certain times, it's prone to have more accidents than usual. You can actually have some proactive activities where you can push that out. we haven't seen anybody doing that in a very proactive fashion. But the art of the possible is there's no reason why you couldn't do that with the information that's available if you can actually piece it together. Yeah.
But don't send them a message when they're driving.
Don't send them a message when they're driving. Exactly. There are different ways that you can do that. So if someone actually comes in and they want to look at their leaderboard associated to where they drive from point A to point B, based on the pins that you have in terms of the maps associated to what you're giving them, you can start to put messages associated to say, you know, better driving is associated, you know, in this area. You were rated lower than that, and here are some things that you might want to think about. There's a lot of psychology sort of views around the fact that you can influence. So, you know, there's some studies around the fact that your driving DNA can be known at 250 miles. So within 250 miles, you essentially can predict your driving DNA. The key issue is how do you then influence that driving DNA to be a better driving sort of activities post 250 miles, knowing, you know, that there's some influencing factors with some facts of what you're actually doing and how you're doing it with other contextual data. So, and it, you know, it's a sensitive topic, right? So, folks, you know, there's a really, really thin line associated to where you're, you know, big brothering and having too many monitoring activities versus the fact that you're actually trying to help the customer either drive better, get better services, or actually optimize in terms of what they're paying for their insurance products, right? And so that's where insurers are really trying to figure out how best they cater their propositions. And there are probably different propositions that you have for different segments of your book that you want to take a look at.
Yeah, so I have a question in terms of kind of looking forward at trends. Obviously, you know, you can rent cars on an hourly basis now. You've got Uber, you've got self-drive cars, right? So, you know, if that, especially with, you know, coupled with the trend of urbanization, which we're seeing in emerging markets as well as Western markets, how do you see insurance evolving to take, and telematics in those contexts?
So I think it's a slow approach. It will vary by markets. So obviously we're doing some work within, you know, micro insurance in certain markets in terms of how best they're dealing with usage-based insurance, and they're paying by mobile capabilities. They don't have a bank account, but they've got a mobile phone, and they essentially want to pay, you know, services through the mobile phone. Certain markets will actually drive that usage-based activity a lot faster than others. I think insurers need to have options rather than one or the other. I think mature markets will probably be a slower push in terms of that transition, in terms of that usage-based insurers. And I think markets like Latin America and Asia, some of the markets out in Asia and Africa, I think you'll see them actually pushing the boundaries a bit more because, you know, they've got the flexibility, they've got lower regulations in terms of what they can try to do in that space. So I see them moving more into, I'll pay for what I want to use. Obviously, some of the trends that are happening out in the West Coast and here around, you know, renting the car for the day or, you know, using the car for the day, you know, I think, I don't necessarily think we've cracked how best that will mean for the mass market today. I think the organizations who provide that service are probably dealing with that more as an affinity type insurance products as a group rather than as you use them.
But it seems like from what you've said, they're not really thinking about it, right? I mean,
well, I think some of them are thinking about it and they're worried about it. Do they have an answer for it right now? Some folks are more mature in terms of what they want to do and how best they want to do it, but their ability to try to execute against that strategy on the traditional model is not as easy as you know, some players, right? Because you got legacy to deal with. There's a big economic impact associated to usage-based insurance on the traditional model as it relates to how you price, how you hold your reserves, how you deal with claims. So there are a lot of things that needs to be dealt with, and you know, it's loads that insurers need to think about in terms of how best they do that. Could it be a disruptor? Absolutely. Will it be a you know, disruptor right now? I don't think so. I don't think so.
Oh, hi. I've worked in insurance, but it's not my core domain. I'm techie by trade. My question is, kind of conceptually, is the kind of accuracy of mobile phones to a point where you can actually use it as sort of transponder, does that mean the phone companies actually already have kind of usage-based data? And then if you use the phones, could you actually look at, say, insurance policies in other domains like contents insurance, because you look at the family and how often the devices are in the house? Business insurance, because you look at how many employees are actually in the physical building, and actually take it beyond just sort of car insurance. I mean, that's my question, really.
So you're spot on. So, I think the explosion of the smartphone and the accuracy of the data and the fact that more and more information is being captured, I think the telecoms industry know a lot about you and what you do and how you do it, where you do it, and who you're talking to, and what organizations you're walking into, either casual or business related. Could that information be used? Absolutely. Some of it is being used already, right? So I don't know if I think it's O2, where they almost push adverts to you as you pass certain stores that you've gone into before, right? So they're starting to utilize that in a not too invasive fashion. Our view is the data that's being gathered by the mobile phone is pretty accurate. The key issue that we've got now is how do you tie that data to the individual that's driving that car rather than fraud. So I think there's some new technologies likely to emerge around syncing up your mobile phone to a Bluetooth type fitted device on the car that's self-installed, that's pretty cheap, that will help with the accuracy associated to what you're doing from a telematics perspective, so you can actually counter the fraud-related activities that are possible. The whole connected insurer space, our view is mobile phones and smartphones will essentially drive that engagement and how best you want to drive different propositions and products to the end consumer. So your ability to understand the connected home and what is in there, and even sensors on certain aspects where you're actually driving claims avoidance, I think will become a big push this year. There's a couple players who are embarking and investing quite a lot in that space in terms of how best they drive that whole connected home ecosystem. There are things that we're looking at as it relates to pet devices and sensors on vital signs on the pets in terms of how well they are and how you integrate that with the veterinarian services. So I don't think this stuff is far off, right? It's just how do you loop it all together and actually create a scenario where there's a business sense and a business outcome for the end consumer that they see value in it.
Thank you.
Okay, Roy, I know the Accenture Insurance Labs covers much more than telematics, and I'm hoping we're going to be doing a joint event at some point, and you'll be able to showcase all the different things you do. Yep. So I think, Paul, we're going to drop in and see these guys, aren't we, at some point? But thank you very much, Roy. Thank you. Okay. Moving on, what we're going to do now is move on to our first scenario. We'll spend now